Sustainable finance is becoming an increasingly important topic in sustainable development, and it's of special interest to policymakers. The European Union has acknowledged that sustainable finance is fundamental to direct investments in the right direction and to implement the European Green Deal. How can sustainable finance help Europe to reach its sustainable development targets? What types of challenges can be expected? What is the EU taxonomy for sustainable finance, and what roles do rating agencies and green bonds play? Today, we will discuss these questions with the top expert of sustainable finance, Alexander Bassen. He's Professor of Capital Markets and Management at the University of Hamburg in Germany, Honorary Research Associate at Oxford University, and Visiting Professor at Hong Kong's Baptist University. Professor Bassen is member of the German Council for Sustainable Development and was a driving force of the German Sustainability Code, a standard for non-financial reporting. Alexander Bassen, thank you very much for taking the time for this interview today.
Thank you very much for the invitation.
When we have a look at the financial markets and their contributions to sustainable development, what's their role in reaching, for example, the 2030 targets?
I think it's quite clear that if we look at the necessary changes to achieve the sustainable development goals or to achieve the 1.5 degree Paris Agreement target, I think this is very important to have, first of all, the understanding it's not possible to finance this transformation exclusively by government. You need private money for that. There is enough money in the market, and you have to understand from the market participant perspective how you can invest this money on the one hand to support this necessary transformation, and on the other hand also achieve a risk-adjusted return, so that these investments are not necessarily linked to lower returns but to market and risk-adjusted returns. So it's not a lack of money, it's more a lack of understanding how to invest that money, even if that changed a lot in the last 3 to 5 years.
What changed during the last 3 to 5 years?
I think the understanding that ESG investments, so investing in environmental, social, and governance related topics, is important for the customers of asset management firms, so for asset owners, but also for retail investors, so that there is an understanding that this is necessary on the one hand, and on the other hand, I think this is even more important, that it is not linked to a reduction of risk-adjusted return. We published a paper in 2015 where we analyzed 2,000 academic studies related to that field. So very clear empirical evidence that it pays off to integrate sustainability factors in investment decisions.
You said investors and shareholders become more and more aware of ESG and of sustainability issues. Is this a minority? Is this a niche, or is this a mega trend?
Well, 2 years ago, maybe it was still a niche market, but I think that dramatically changed in the last 2 to 3 years. But we also have a lot of regulations on the European level and also on the national level that forces investors to integrate ESG factors.
You mentioned regulation and public funds as driving forces. Do private investment funds also play a role in sustainable finance?
Yes, definitely. They definitely do. I mean, from different perspectives. If you look at the pension funds, they're usually also private, like in the Netherlands, which are really advanced, and also in Germany and in Austria, in other European countries, we do see that the private funds are getting and do have the pressure. Why? Because they have their asset owners that are investing and are managed by the asset managers, and usually they have a policy agreement where it clearly said that if you manage my fund, then you have to go to the AGM, the annual general meeting, you have to vote in favor of green or environmental friendly or social friendly agenda topics on the AGM, And so therefore they are increasing the pressure, and they are also starting to integrate that because it became more and more obvious that this also has influence on the license to operate for financial institutions.
Do you see other differences between world regions or differences between countries regarding sustainable finance?
Yes, there are differences, also from a performance perspective. If you look at Asia, for example, there are a lot of regulations in terms of ESG reporting, ESG integration, and the reporting is there, but the integration in companies is not as advanced as it is in Europe, for example. If you look at the market share of ESG investments, it is mainly driven by the European market. If you look at the US, you can also see that there are, in some states, there is a very strong ESG investment, like in California, for example. Also, the regulations are quite advanced there for cap and trade, for example, for emission trading on a state level. So I would say Europe is still the most advanced markets in terms of ESG investment, the US is the change also in the last, I would say, 3 to 4 years.
Do you have the impression that these different countries learn from each other regarding the implementation of such regulations, or is it rather a competitive situation?
I think this is something that goes step by step. They do see where do we have an advantage if we cooperate, or where do we have to assure that we do not reduce our competitive position. And this is something which will be a process where we can see that as long as it's for the advantage of all of the participants, they will cooperate. And if that is not the case anymore, then they will split up again.
One of the milestones is the EU Taxonomy for Sustainable Activities. It is a classification system establishing a list of environmentally sustainable economic activities, and it entered into force in mid-2020. It's perceived as an important enabler to scale up sustainable investment and to implement the European Green Deal. How does the EU Taxonomy regulation work, and whom does it address?
So we have these two different perspectives. Companies that have to report based on the taxonomy, and investment professionals that have to report how much revenues do they have in taxonomy aligned companies. So that's the general idea of the EU taxonomy. And you will probably say, well, 2 objectives is not that much, right? And that's why the EU is defining this year in 2021 some other objectives. So all environmental objectives. And if you look at the technical screening criteria, they are very detailed. So for every industry, for every activity of a company, it's clearly defined what is taxonomy aligned, how much CO2 emission per product are allowed. So it's really fun reading these 200-something pages technical screening criteria. And they will publish a first draft in May 2021 of these technical screening criteria. And everyone is expecting that for next year, 2022, companies have to report all the 6 environmental objectives plus do no significant harm.
What's the pathway between the reporting obligation and the change towards sustainability we need?
That's an interesting path, because this is something we also learned from the literature, that the general idea is first you have to enhance transparency on sustainability performance. And if you do have this transparency, or even before you generate this transparency, companies will adjust the processes, the internal processes, so that they do not have to report negative environmental performance, for example. So the idea is, if you have to disclose something, you try to be good.
You already mentioned before rating agencies. Rating agencies play a key role in financial markets. There are 3 US-based agencies, Standard & Poor's, Moody's, and Fitch, and they hold a collective global market share of 95%, and there are just a few rating agencies specialized on sustainability. How do these ratings influence financial markets? Who cares about these ratings, and what's the role of rating agencies in sustainable finance?
We do see a very interesting development right now in the market for rating agencies. What you just said is absolutely true. We do have this market of ESG rating agencies and of traditional financial rating agencies. So first of all, the business model is different. For financial rating agencies, the company that is rated has to pay for it. And for ESG rating agencies, the customer pays for it. So investors who are using ESG ratings, they pay for the rating. So this is a totally different incentive mechanism we have in place. This is the first thing. Secondly, we saw that a lot of these ESG rating agencies were independent, and that changed in the last 2 to 3 years. So there were a lot of mergers, which is also a strong signal for mainstreaming of ESG factors. And the integration of financial and ESG analysis in one tool based on this merger tendency. That was the first part. And secondly, how important are these ratings? Usually the large investment firms, they do not use only one ESG database, they use several, up to 9, 10, 11 different, to design their own model and to integrate the different ratings. Because they have a different focus, these rating agencies, sometimes they also have different data, because the process of data generation is different. And so to balance the results of these different ratings, the professional investment firms, they are using different approaches of different rating agencies.
In which industry sectors are ESG ratings a common standard, and in which industry sectors it's just an issue for a minority of companies?
Well, I think it's not really only a question of the sector, it's more a question of the size. So for the usual suspects like oil and gas, chemistry, automotive, of course, they are all covered. But if you think about smaller companies, the costs are extremely high also for a rating agency to get the information, because there's not that much information publicly available. This was exactly the idea when we published in 2011 the Sustainability Code, to give smaller companies a tool where they can use to report 20 criteria and to enhance the transparency also in this field.
So the German Sustainability Code is a kind of easy way of dealing with ESG reporting. Has it been taken up by the rating agencies by now? Do they consider it?
Well, yeah, some of the rating agencies are using that because they do get information for smaller companies. And it is also, the access is very easy because there's we have an underlying database. The information is free of charge. Everyone can use this information. We know that it's also used by banks right now. Of course, the CSR reporting requirements cover listed companies plus insurance companies and banks, even if they are not listed, with more than 500 employees. And of course, if they have to do something, they use the sustainability code to report it. We have now more than 600 companies in Germany that are using the sustainability report. And that means that it's the most important reporting standard here, even more than GRI, because it addresses all these smaller companies. And we also can guarantee that it's aligned with the CSR reporting requirements in Germany. So it's a very easy tool, free of access. Everyone can use it. It's used in Greece and Israel. We also have a Russian and a Chinese version of it. So access to everyone who would like to use it to enhance the CSR reporting and of course also the CSR implementation.
So it can be used by an individual company, but has it been replicated officially by another European member state to say we established this code in our country as well?
No, it hasn't, and it's also not established in Germany. It's still a voluntary standard. but it's just linked to the mandatory reporting. So it's not that the German government recommended the sustainability code. It's just used by the company and fulfills the requirements of mandatory reporting.
What should policymakers know about ESG ratings so they can leverage them for sustainable development policies?
Well, first of all, I think it's important to understand that it's normal that if you compare one company based on different ESG standards, that you will not get the same result. I think this is very important because every ESG rating has a different approach, a different methodology, different ways to measure something, also different weightings. Some rating agencies have higher demands in terms of ESG. Some have lower thresholds, so therefore the results will never be the same, even for the same company. Secondly, I think it is also important to understand that without these ratings, ESG investment would be much harder for the investment community. It will be interesting to see, also this is important for politicians, if it will change the competitive situation if this raw database, which is discussed right now in the European Union, will be implemented. Raw database means that companies are reporting their ESG information and that this will be publicly available in a database. This is, of course, part of the ESG rating agency business model. So they are already adopting to see, well, if this information is publicly available, maybe that's also an advantage for us. I think this is also important to understand what is the effect of measures, of political measures, of regulation on the market, here in this case, rating agencies.
If we now have a kind of concentration tendency in ESG ratings, should Europe have an eye on having at least one strong ESG rating agency in Europe?
Yeah, that's a good question because the ESG rating agencies were by nature all European. You mentioned Sustainalytics, Ökom, Vigeo, IRIS as well. MSCI, not really, but so there we do see something like that. And the question of if we do need a European one, it's also difficult to say. I don't think that we will have another approach for ESG rating agencies in that field. Even if I think that it would always be good to have like a diversification in terms of regions for data collection and data provision, also in terms of stabilization, reliability, that would definitely make sense. But I think we are right now going in another direction with all these mergers.
At the end of our interview, let's have a brief outlook. What future do you see of sustainable finance in the long term, for example, until 2030?
We know from natural sciences that there is a very, very strong need to act now. And of course, we do need a lot of money to act now. And this is also something that became more and more important and, important for the financial community. And they do understand that this is the case. So therefore, I think the next 2 to 3 years will be important to start to shift the systems, to start the transformation. And I would be really happy if that would be possible in a way that is really sustainable. So I think we have to be extremely careful what kind of transformation we are triggering right now. I think it's very important to have all the other environmental, but also social objective in mind. But I'm positive in that. I think that the understanding, also in terms of education, by the way, is changing, and that the understanding in the market is there that there is a need to act, and that it's also a business model to act. And this is also something that triggers a change in behavior.
What kind of leverage points, what kind of tipping points should policymakers have an eye on during the next decade?
Well, I think it's important to look at the percentage of investments that do take ESG into account. It's also important to look at the number of companies that report ESG factors. They also have to look at the tax system. So how is a tax system supporting non-environmental friendly development? So it is important to start changing the financial system, but you have to see the links, the interaction of the financial system with other regulations. And this is quite difficult because these systems are complex, and it's also helpful, and no, not really only helpful, it's necessary to integrate as much stakeholder as possible.
Alexander Bassen, it has been a pleasure talking to you. Thank you very much for this interview.
Thanks for having me.